Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. Great to be with you back this week. RSP season is just around the corner, so please don't forget the TFSA limit has been raised another 7,000. I think the total limit is 105,000 if I'm not mistaken. You can put funds into a first home savings account, which is a great way to get those kids out of your basement. The limit for that is $8,000. And of course, don't forget that if you want to put funds into your regular RSP account, you can get up to 10 grams of gold free. Go to getyourfreegold.com and learn how to do that and hold physical gold and silver. Remember, if you can't hold it, you don't own it. And that's what vehicle we offer in the registered accounts. And that is the first spiel of the day. Jerry.
Love it.
Jerry Correia, welcome back to The Real Money Show.
Great to be here.
This week on the show, we're going to be covering, so we heard some really big news out of Mali this week, which is what would you say, commandeered a couple tons of gold from Barrick's mine there?
Yeah, they did. So Barrick Gold, the world's second largest gold producer, has been forced to suspend operations at its vital Loulo-Gounkoto complex in Mali, marking a critical escalation in an ongoing dispute with the country's military government. It's coming after the authorities seized the stored gold and stopped exports since November. Even issued an arrest warrant for the CEO, Mark Bristow. It's the conflict overall. It's stemming from disagreements over revenue distribution and Mali's new mining legislation. And they're claiming unpaid taxes and demanding compliance with these updated mining codes. Ultimately, they're just looking for more money, more representation from the mines, and a bigger slice of the pie. And we're seeing this trend playing out globally.
So this is what we want to tackle this week on the show, is the trends that we're seeing stemming from the mining industry all the way up into globalization or mercantilism, which is where we believe we espouse that. We think that we're headed towards more mercantilism, and then how that affects Canadians and how that affects the Canadian gold mining market, and where that eventually puts the prices of the metals, and why it could be an incredible opportunity at this time.
I think this time is different, Jeremy, because in past and with other mining companies in Mali, they have reached settlements before, and recently Barrick offered $370 million, an offer which failed to resolve this new standoff. So it's leading to this current crisis and proceedings. So this is very interesting. It's beyond money. I mean, this is hundreds of millions of dollars of offers. You think they would take it, but no, this is a bigger problem.
Could this be a move towards nationalization of the mine? You know, this kind of uptick in tension, is it potentially a play towards nationalization?
Oh yeah, I mean, we're seeing that. We've seen this in Africa. We're seeing this around the world, Jeremy. And I think with the advent of the BRICS movement, the Brazil, Russia, India, and China, South Africa pact that was made, highlighting the importance of resources, highlighting the importance of protecting your resources and looking after national interests. It's no longer a global outlook and which only benefit the few. And we're seeing this impact as well in places very close to us, just south of the border, the U.S. and Mexico. You know, understanding how it relates to silver and gold. You know, this is the country which imports or exports about 47% of the U.S.'s silver needs. And this is now a big talk in Mexico of nationalization. The governments there have already put into place that they're going to be nationalizing mines. And there was an amazing speech, if I can get into that really quick. They declared that the people of Mexico have been oppressed and exploited. This is coming from the government down there. Exploitative acts of the U.S. and Canada represent savage and severe acts of greed. Therefore, it's great faith and confidence that we call on Mexico to nationalize its silver and gold and copper, just like it did in oil previously. These precious metals rightfully belong to Mexico and its people, not to the industrialists and corporations that have plundered the nation's wealth while keeping its workers impoverished. By reclaiming control over their silver and gold deposits, Mexicans can break free from this neocolonial exploitation and build an economy that serves the interests of the poor and marginalized, in line with our Creator's preferential option for the oppressed.
Well, I guess the question to find out is if that's just rhetoric of a tyrannical government or if it's something where they're actually looking for freedom. I remember reading Confessions of an Economic Hitman by John Perkins in the wake of 9/11. He wrote this book and said, hey, if something happens to me, you know that what I'm writing about is the truth. And he talked about working for Rand Corporation and basically government NGOs and how they use them as cover. Right. So, and what they would do is they would go in and get you bulked up on loans in all of these countries. And when you realize you can't pay those loans back, you'd get votes at the UN, or you would get rights to drill for oil. They would come for their pound of flesh. Mm-hmm. And so what you're seeing with this kind of move towards mercantilism, in my mind, is that, in my opinion, is that a lot of these BRIC nations are casting that off, that process that they've seen in the past. And if it didn't work from an economic standpoint, by the way, John Perkins talked about that they would send in the jackals. And that's when you'd get, you'd have these people basically being assassinated, their helicopter would crash or whatever, and they could install a new government who would agree with it. And what's funny about that, Jerry, is when I read about those and I read about the tyrannical leaders who went along with it, I think, wow, the country we live in currently, as it stands right now, is not far off from that sort of formula. I don't know who they were working for, but hopefully we will see some change. I'm very positive on that change. So let's talk about the fact that, we just mentioned this mercantilism concept that these countries are saying, look, we want more control over our resources. We want to make more off of it. We want to be more involved in the supply chain of it, more involved in what gets produced with these commodities, et cetera. And it's not just in developing world, third world. It's also happening with G7 nations as well.
Yeah. We saw the trend recently, just this past week and a half, how Alberta's Premier Danielle Smith visited Mar-a-Lago. Obviously, Alberta being the economic engine, in our opinion, of Canada, being an oil and resource-driven economy. The focus now, and I think the focus on Canadians, is we have to get these things open and running. We have to start empowering ourselves and using the resources that we have and use them for our good and for the furtherance of Canada first. And we're seeing this trend even further. BNN Bloomberg reported just today that Canada wants G7 talks. So Canada is going to be hosting the G7 coming up. They want talks on metal pricing to counter China's sway in precious metals. And this is just coming on the back of us talking about the importance of calling silver what it is. It's a critical mineral. Once you do that, you start getting the things in motion to help strengthen the mining, to help strengthen the production. So the economic minister, or the Canada's natural resources minister, in a speech in talking about countering China's sway. Well, what is that? Wilkinson, that's his name. He says he wants to work with other group of 7 nations to make pricing support initiatives possible. It's a possible centerpiece of discussions when Canada hosts the summit in June. This could be expanded to other nations like Australia, he said, adding that nickel dumping has caused enormous problems for our Australian friends. To build mines and secure resources, investors will need some degree of certainty that the products that they're actually producing, like silver and other minerals, are going to have value in the end of it, Wilkinson said. If China can just simply intervene and crater the price, you will never see the development of the critical minerals that we have to.
So bit bold statement there.
Very bold.
Accusing China of manipulating metals prices.
I never knew that they had the COMEX and the LBMA there in China. According to our research and our data, we know the Shanghai price of gold is much higher than the low COMEX price. Someone should tell Wilkinson that, China does not have the gold and silver price right now. I think that we're going to see a massive shift in pricing. A true price discovery will happen, especially as we're seeing distortions happening in the LBMA right now, the rattling that's coming out of the COMEX, and a bunch of drama that's ahead for the COMEX.
And there's some crazy drama happening at the COMEX that could spike the price up like we saw in 2011. We're going to get into that in the next segment. So there's a lot going on in the markets, a lot that can push the markets much, much higher. And one topic we want to talk about a little later on in the show is, should the Canadian pension plan include a reserve asset like physical gold as part of their portfolio? What would that look like? What could that have done for them over the last 20 years? The number 18778-SILVER, the website guildhallwealth.com. You can put gold and silver in your own pension plan, your own retirement plan. We work with Questrade, fully allocated, fully segregated. It is physical. If you can't hold it, you don't own it. We use that as our motto, and that's how we use that vehicle with our friends at Questrade. And of course, if you've never acquired precious metals before, this is a great time to get involved. We're going to show you the numbers. We're going to show you where we see gold and silver headed. This is the time to protect your wealth and protect yourself from inflation, because that story has not ended either. Guildhall will be holding a seminar on February 1st, and this is going to be about teaching people how to hold physical gold and silver and the benefits of holding gold and silver in a registered account. Jerry, we've been involved in registered accounts since 2015, almost 10 years. And believe me, in that time, we've worked with thousands of customers, thousands of Canadians who all have similar issues with investing in registered accounts and the problems and what that looks like. And, they have a lot of questions about what it could be. What is the difference between an RSP and a RIF, and how does that work, and what does it look like, and what are the goals? And, you talk to I get the impression a lot of times that advisors don't really have end goals in mind. They just they're happy to let customers say, oh, well, we got you 5% last year. Well, there's a lot more to it in registered accounts. You've deferred your income. What's the goal now? Mm-hmm. What do you actually have to make? What kind of profits do you have to make to cover inflation, to cover withholding taxes, to cover taxation at the end? What does that look like? What would it look like if gold goes from $2,700 to $7,000 an ounce or higher? And how would it work in your registered account? So we're having a seminar. It's going to be on February 1st. All you have to do is go to guildhallwealth.com. You'll see the seminar sign up right there on the front page. Add your email. We'll get in touch with you, and we're already starting to get some seats filled up for that. Oh, yeah. Again, February 1st. Go to the website guildhallwealth.com. Jerry, we were just talking about critical metals, this move towards nationalization. I think about Jim Rogers and his book Hot Commodities, and this idea that you go from an equity bull cycle to a commodity bull cycle. You're seeing these moves. You see Trump going after Greenland. Why? Obviously, there's critical metals. There's critical commodities. There's it's not the only reason. You hear Kevin O'Leary talking about a union. If you're going up against China or Russia, you need a strong economic union, and that we offer something to that union. You talked about Mexico. They offer something to that union. And it might not be that we actually become something like a European Union, but it's more about, hey, we got to work together as allies and friends and neighbors and pull us all up. Pull us all up. There's a lot of money to be made. We can all be making money, and we can get back to a wealthy country again. Jerry, I got to tell you this. Sorry to just
go on.
Steal from you here, but you know how every so often on Instagram they do these animated charts, right? And I told you about the one with oil, and I didn't realize watching this that Canada's in the top 4.
Yeah, fourth.
they had another one of most wealthy nations since 1970.
Okay.
Okay. I've seen one with like most like richest athletes, right?
Yeah.
And you see them moving up and down, and it goes through the timeline. Canada in 1970 was in the top 3 most wealthy countries in the world before Trudeau Sr.
Mm-hmm.
Okay. And you watch it drop, and you just keep watching it drop, and it goes up a little bit and whatnot. And we are down. We're way down now. I can't quite remember if we were still in the top 10. I think so. But man, we were in the top 3. You knew you were one of the richest countries.
Mm-hmm.
Not anymore.
Yeah,
man.
not anymore.
Not anymore. And how do you do that? And how do you do that if your government isn't helping you do that? Gold is up 600% in the last 20 years. Silver still undervalued, keeping up with inflation. I think it's up 400+% in the last 20 years. Jerry, I want to just talk about the Canadian dollar for a minute before we get back to the mercantilism and all the chase for that. Just to segue for a second here, divert attention to the dollar. What has happened to the Canadian dollar in the last 20, 30, 40 years?
Well, we know for sure that the Canadian dollar has lost about 93, I would argue 96% of its purchasing power since 1920. In 1920, $100 today is equivalent in purchasing power to about $1,424.50 today. So what we have seen is a rapid, especially since the chart shows since 1980, a dramatic uptick, especially after actually 1970 when the removal of the gold standard occurred in the U.S. Things just really got decoupled. But the Canadian dollar and all fiat currencies that are not backed by gold any longer are just simply losing purchasing power. And what's worse is that the measurement of this currency's purchasing power's loss is just been rejigged. The calculation of inflation, the CPI data, was actually changed in 1980. So we no longer have a good measurement, a good tool, a barometer to gauge how fast and how quickly we are losing our currency's purchasing power. This is a big problem, especially going forward, and this is why we're having this seminar of understanding. If you do have an RSP and you're 50 years old, in 20 years you're going to have access to this RSP when it becomes a RIF. In 20 years, what does your loonies provide for you then? You're going to need much, much more from your RSPs. So the argument is to now really prioritize your real wealth, which is physical precious metals, measuring your wealth in ounces, not depreciating fiat currencies. And this is what we want to do. We want to educate and show that this is very important. And especially if we look at what was written years ago from the C.D. Howe Institute, one of the foremost leaders.
Well, before we get to that, just to give a sense of it, okay? Now, this isn't Canadian, this is U.S., but in 1940, the average yearly income was $1,368. Minimum wage was 30 cents. Unemployment, though, was 18%. The average house cost $2,900. The average rent was $27. A New York City apartment was $35 a month. Harvard tuition, room, and board, $924 a year. Law school, Penn State, $400 a year, okay? By the way, the stock market was trading at 111 points, and a movie ticket was 25 cents. Gold, by the way, $33 an ounce. The fact is that inflation is a tax, it's theft, it steals your wealth, and Canadians, we've said this before, you pay 30 plus 40% income tax. Then you pay 13% on everything you buy after that. Mm-hmm. Okay, you're already up above 50% of your income, and then they say inflation is at 2%, 3% when it's actually more like 8 or 9 or 10% in some cases. So you're already losing 60+%, or even 70% depending on your income, to taxes.
Right.
Because inflation is a tax. There's no way that you should be accepting 2% inflation rate, which is a 2% loss of purchasing power every year. That's 20% every decade. That's 40% every 2 decades. Now, you've been fed a bunch of malarkey for this, that you're supposed to accept it. And then, of course, when inflation is obvious to everybody, anyone with a brain cell can see the inflation now, and everyone's talking about it, which is great. We've talked about it for a long time, right? I think we talked about shrinkflation back in 2008 when we first got on the air. So, we've been very much well aware of it. And what has gold done? It's done what it should do. Now, this is the other thing that people get convinced of, chasing yield. Well, the way you deal with inflation is to make investments. No, I shouldn't have to risk money to protect against inflation. Gold has absolutely protected against inflation, and you don't have to do anything. You just have to sit on an asset that's growing in value because the dollar's going down, because it's the ounces. It's not the price.
Correct. This is all about, the main focus is choosing to be financial resilient, choosing for yourself, independence over dependence on chasing yield and hopes. This is proven wealth building strategies of accumulating ounces, converting out of these fiat currencies that are just going to be decimated going forward. And there's no way around it. There's going to be more fiscal spending, more monetary spending. The treasury yields that are surging right now, hitting 5%, very close to that. History, we have never seen that. The last time we saw that was a very long time ago, where there was just before the financial crisis in 2008. We're hovering around these levels right now. The market is showing tremendous risk, and gold's resilience, even while the US dollar is spiking right now, along with the yields, is a testament that the US dollar is in trouble. Not only that the stock market's in trouble, but the gold and silver markets are so undervalued. You mentioned all of the prices that, for university costs and employment and what we were getting back then for our money. If we compare where gold is right now versus where it should be, factoring in inflation, you will see how undervalued gold and silver are. This is the place to put your wealth and to bank for your future.
And speaking of putting wealth places, let's get to the pension fund. Very quickly, Jared.
Very quick.
We came across this article. Let's just talk about this article and the recommendation. Let's go for it.
Yeah, this is coming from the C.D. Howe Institute, one of the foremost leaders, think tank in Canada. They wrote this paper back in January of 1996.
Okay.
A very long time ago. Titled, Putting Some Gold in the Golden Years, Fixing the Canada Pension Plan. Do we have pensions here? Do we have pension listeners, pension holders, thinking about your future?
Yeah, a lot of people take their pensions that, they're no longer working with the company, and they take their lira and their locked in RSP, and they'll contact us to say, listen, I want to put this former pension that I have into precious metals.
That's a very wise decision in not letting your funds linger in pension companies, because as they wrote back in 1996, the Canada Pension Plan is a pay-as-you-go pension system, a Ponzi scheme in which the benefits of each cohort of participants are paid from subsequent cohort contributions. Like similar plans around the world, the CPP is in trouble. When as now interest rates are higher than growth in wages, participation can only be made more attractive than saving outside the plan by continual benefit enrichment financed by ever heavier future payroll taxes. There's not enough participation. The economy, Jeremy, is shrinking. Less and less participation in the workforce spells only trouble for the future of pension, the CPP pension plan, and the idea and the recommendation of putting some gold in the golden years is paramount. This is a huge message, and we all should do that. If you have an RSP without gold in your RSP, this is the time to put some gold in there for your golden years.
And don't forget that in the mid-90s, the price of gold was trading around $300 an ounce, and then you had Brown's Bottom where it went down to $250 an ounce, and now it's up at $2,700 an ounce. the math on if they would have held physical gold in the portfolio, and even to think about Canada selling off. You know who sold off half of Canada's gold, by the way, or a majority of Canada's gold before Trudeau finished the job?
Who was that?
Mark Carney.
Oh, goodness gracious.
So, could
say.
you imagine if we just held on to that gold for the last 8 years, 9 years? Imagine if we just kept that gold. Gold back then was trading at $1,100 an ounce. We're at $2,700 an ounce. I don't understand why any entity wouldn't want to hold an asset that hedges the devaluing of your currency. It's criminal. But it's so easy for individuals to do it. You just call 1-877-8-SILVER. The website's guildhallwealth.com. You can go to the seminar, sign up for the seminar for February 1st. And just remember, if you can't hold it, you don't own it. We've called it the Real Money Show because at the end of the day, money should be a store of value. Currencies are a unit of exchange, and at some point in history, sure, they've been both. You've used silver as a means of currency, but at the end of the day, gold and silver have been an incredible way to maintain purchasing power, and that's what money should do. There's also a lot of people out there who are learning about money for the first time as they, get involved in cryptos, and all of that is fantastic. I love what Ray Dalio said. He said, gold is a reserve asset. Cryptos are speculative. I own both. And it's like, yes, of course you do, because that's what investing portfolios are. Mm-hmm. It's having a reserve asset and then being able to afford to take speculation because you have a reserve asset.
That's right.
It's very, very simple. I see a lot of people making mistakes. They call Bitcoin a store of value. Just because you have an asset that is increasing in value doesn't mean it's a store of value, because now you're getting into definitions. You want to change the definition of things, right? You want to say, well, what is typically a store of value? If I invest in Apple stock and Apple stock has done very, very well for me over the last 15 years or longer, does that mean it's a store of value? Mm-mm. I don't think so. I would say it was a successful investment.
Yes.
But you can't conflate the two. Exactly. A speculation is not necessarily the same thing as a store of wealth. You look at what the rich have done throughout eternity, and it was, we want to own jewels. We want to own precious stones, precious metals, right? What did the Vikings do? They didn't steal the wood. They didn't steal the pretend currency that whatever civilization, town was using at the time, their seashells. No, they took their silver. They took their gold on their way, right? It's what the real store of value is. And I like how you put it into perspective, the intrinsic. And what specifically makes it intrinsic, Jerry?
Well, for me, the mere fact that gold and silver are both on the table of elements proved to me that they were before time. We never made them. They were not man-made. As technology can expire, gold and silver's usages will never expire. They cannot be replaced, which is what makes it a great store of value, the only store of value, and the only store of value which is their resource. Why central banks around the world need this resource, need this reserve to decouple their wealth away from risky assets.
Now, here's the thing. Anyone in the gold, silver market looks at gold and says, this is part of your portfolio, right? Like part of your breakfast.
Yes.
That was the thing in the 80s.
Does body good.
Does body good. And no, that it's part of a portfolio. You have this reserve asset so that you can properly diversify. You've got an asset that is negatively correlated to the dollar, which means that if something happens to the dollar, you're protecting your wealth. We've talked about that even with the Canadian dollar losing 93% of its value. But we don't sit there and say you should have 100%, that you should sell your home, right?
Right.
We don't. If governments want to own it, that's a good thing, because ultimately especially with a bimetallic standard in the United States, the idea was that you're not going to have just the rich gobble up gold. You'd also have silver. So that's why silver became the people's gold. Mm-hmm. There's a lot to it in that. But for some reason, specifically the Bitcoin crowd are obnoxious about this, that they seem to think that it has to replace gold. I don't know why they're picking that fight, why it has to be gold 2.0, right? You could say, okay, fine, you can call it digital gold, but that doesn't make it gold, right? It makes it digital gold.
It doesn't put itself on the periodic table of elements.
Exactly. It doesn't get it onto the periodic table of elements, and it doesn't guarantee that you're going to outlast civilizations.
No.
And, you know, yes, you've had countries in the past be able to trade with, you know, New York was bought for beads.
Right.
Okay. Until they could print the beads, until they could create them en masse. Also, at the time, the natives didn't really know about gold. So, you know, but those that did, you know, that's why it was being taken out of the country. There's always technologies. It's fantastic. It's great to think about the future of money and what that can look like. You know, you and I agree on the idea of a quantum financial system would be unbelievable. Mm-hmm. You've got Judy Shelton talking about having a gold standard to prevent countries like China from manipulating their currency, which they've done a lot of, to get a better hand on exchange, on mm-hmm. trade of goods. And gold can prevent that. Mm-hmm. And so there's lots of reasons why gold has been the go-to reserve asset. And that it is one of the big reasons, as we like to say, is it's on the periodic table of elements.
It sure is. And as Hans Senoltz once said, the gold standard sooner or later will return with force and inevitability of natural law, for it is the money of freedom and honesty. I just thought to share that quote. I thought it was a great time to plug that one in there, because we all want, I think we need more honesty with our governments, with our monetary system. I think for far too long, it was the fiat currency system that helped finance too many wars.
Yep.
So we want to go back to peace. We want to go back to freedom. And one of the ways to do that is to embrace the thing that doesn't change. Technology changes too rapidly. Technology will expire. And you can't have a resource, or a reserve rather, that can expire.
Yeah, I mean, you wouldn't have it with CDs. But at some point it was all the rage. But no, I mean, look, at the end of the day,
I still have a reserve of CDs, but
yeah, there you go. It's about protecting wealth, and gold and silver have done that. They are hard assets. They are reserve assets. They have intrinsic value. There is a validity in that, and that's why we say it's important to have 10, 15, maybe even more in your portfolio. I know Egon van Gruyert talks about having more than 50%. And of course, since gold started this run in 2000 at $300 an ounce, and silver started around $4 an ounce, or $3.50, the gains have shown for themselves, and we believe they're going to continue to do that. One of the big reasons is because the demand for physical is there, that central banks are going to continue to demand physical product, and the industry for silver is getting better and better. As these technologies grow, you need more and more silver. So there's an underpinning to that. So in the next segment, we're going to talk about where this takes gold and silver and what's at stake in the precious metal right now, because we have a new term, a stockout in the silver, potentially in the silver market. So we're going to talk about that in the next segment. You can join us on February 1st for a seminar about precious metals in your registered account and what that looks like. Remember, if you can't hold it, you don't own it. And it's a great time to learn about how to hold physical gold and silver in your portfolio. Go to guildhallwealth.com. Jerry, I saw Alistair McLeod post something from our friend Grady out of Switzerland, that the silver target right now is as much as $370 an ounce. We're currently trading a little over 30. Plus, you know, we didn't even hype up the fact that just like that, silver's back up to 30 and almost breaking 31 this week.
Yep.
Right? In the post-Christmas pullback, or whatever, you know, what we often see. That was pretty funny. So Alistair McLeod puts that up on his X. I had to comment on that. I thought, wow, you know, if he's backing that target, and he's one of the smartest, most well-researched in this market, and he's backing that claim of $370 an ounce. I thought that was wonderful. And then not but a few moments later after that, we saw Vince Lanci also do the same thing. and he's looking at something similar, where they were looking at $3,730 an ounce for silver. That seems crazy. Here's the scenario. Stock crashes, gold rises, silver goes absolutely ballistic, and you have a Dow to silver ratio collapse. We've talked about the Dow gold ratio collapsing. In 1999, that ratio was around 40 to 1. We got down to 4 to 1 in 2011. Currently, we're around 16 to 1. So that would crash. And if you got a 6 to 1 ratio of silver to the Dow, you'd be looking at 3,730. A 60 to 1 ratio of gold to Dow is 373. These ratios, by the way, anyone who's built anything, who's in contracting, understands math, understands that gold and silver is a measuring tool. And what we're doing is we're measuring in ounces what something is worth. So the Dow could be worth 6 ounces of silver, which would put silver in the $3,000 range. What do you make of those? What do you make of those moves?
Those are some bazookas there, Jeremy. You just highlighted some of the pistons that are moving. We're not in a V6 here. We're not in a V10. This is like a V24. Silver has so many pistons moving at the same time, and we're talking about above ground inventories that are being decimated. A lot less silver than gold. We are in a 5-year structural silver deficit with silver mining declining. 2025 projected mining is under 830 million ounces. There's no new silver discoveries. Mexico is the #1 supplier of silver, and they're signaling nationalization. And we're literally sleepwalking. This is what the street BNN literally mentioned, that we're sleepwalking into a major issue with silver, and this is the silver stockout that we're going to get into, because we are literally sleepwalking. We were talking about the silver squeeze, as we call it, the squeeze on silver that is decimating and depleting inventories around the world, and it's now coming into the mainstream, Jeremy. So this is the time to be looking at the silver market and wake up.
And part of that is that you have the COMEX does the trading. And if you want to take delivery, you got to take delivery out of the LBMA in England, and you got to deliver that over here, except that they're worried about the tariffs. And so the premium, where a 1,000-ounce bar used to cost something like 7 cents over spot for a 1,000-ounce bar, that's moved up to 75 cents. So there's a premium if you want to take delivery of the actual physical. And if you're shorting the market and you need that product, you're now out a lot of money. It's now costing you a lot of money if you need to take delivery of that product. And they need to take delivery of it. And we're seeing constant deliveries of it. The question is when is it all gone, and when does this thing blow up? Because you can't have this much paper against such a small amount of physical. Does it end when Gary Gensler leaves? Like, what is it?
Yeah. At least, the mainstream media is now picking up on it. There was a great explanation last week from the TD Bank commodity specialist. His name is Daniel Gali, well respected in this area, talking about commodities. He discussed it at length, the potential for a silver stockout in light, as you mentioned, of those tariff fears. And he mentioned as a result of the tariffs, there's some implications due to the paper market that you mentioned on the COMEX. For anyone who has sold short silver contracts on the COMEX with expectations the physical metal they have access to can be used for delivery may be in for a rude awakening if that metal they have is refined or shipped by a nation subject to tariffs. That metal will then be priced with the tariff added on top and paid. This leaves the person holding potentially tariffed metal against a short COMEX contract with a decision with multiple unknowns. So this has become a huge topic of conversation, that there is growing concerns that the functionality issues due to inventory depletion. Get my silver now before the tariffs come into play in London, coupled with a growing concern with that tariff exemption. Is silver money now? Is it going to be exempt? All of a sudden, you're going to remonetize silver? Well, the bottom line is there may not be enough silver on hand to satisfy that current demand. And there was a great summary about the potential stockout from that story from Daniel Gali. In a commodity trading, a stockout occurs when ready inventory is fully depleted, disrupting supply. Causes include supply chain delays, demand surges, natural events, etc. Stockouts drive price market disruptions. Key examples span energy, agriculture, metals, you name it. Nickel, we saw the nickel debacle when
we saw this in 2011.
Exactly.
This is what drove part of what drove the price up in 2011. This market is always at every moment ready to explode. We buy in on the fundamentals. We believe in the long-term fundamentals, but the setup for this market is always volatile to the upside. It's always at any moment can explode. And that's sort of something you live with in this market. You know, a lot of people may get in on that because that's what they're hoping for. We're sitting here saying, look, the fundamentals will drive this market significantly higher. Gold could easily get into the 7,000 range just based on inflation alone. Silver, between the usages, between the deficit, between people making the economic decision that I don't want to pay $5,000 for something that I can pay $100 for. Okay. And I also think that once we break $50 in silver, you start to move into a price discovery range.
Yeah.
Right. Right now it's we want to keep this down because of these problems on the COMEX that we can't afford an implosion, but it's going to happen. And once you get above 50, now you start real price discovery, and that's where the ratios come in. Does it go to 150? Does it go to 370? Does it go to a few $1,000s? Time will tell.
Yeah. Well, thank the COMEX because they've caused the disconnect between the paper. When you have 400 to 1, 400 paper contracts to 1, you've created artificial supply. And not only that, you have these paper transactions and algorithms making it look like silver selling off. That practice of naked short selling, which is silver you don't even have, it's illegal. And it constitutes security fraud, further contributing to silver's undervaluation. We're going to be righting the wrongs, and by taking delivery is the first step of realizing and getting true price discovery in the real silver and gold market.
Don't invest in the metal. Own the metal. If you can't hold it, you don't own it. Thank you so much for joining us. The number 18778-SILVER, the website guildhallwealth.com. If you've missed a show, check us out on YouTube and Rumble and Spotify. And of course, we have this seminar on February 1st. Go to the website guildhallwealth.com. Jerry, thank you so much. Thanks to all our listeners. Can't wait to speak to you next week here on The Real Money Show on 640 Toronto.